Edwin de Jong, one of the analysts from Edison Group, and I'm happy to introduce Stern Groep to you. We are joined here today by CEO Henk, Henk van der Kwast. Hello, Henk.
Hello, thank you, Edwin.
Henk, as a large nationwide car dealership representing many car brands, Stern has been or will be affected by several technology trends, like the rise of online business models, the electrification of car fleets, changes in ownership patterns, so like private leases or car sharing. Can you explain how that has affected your way of doing business and how you are coping with all these changes?
Well, it's a continuous process. All these technology changes in our business. Of course, autonomous driving is an element. Electrification is another. And as you noticed, it takes a lot of cameras and chips, computer chips to get this all manufactured. And in this period, it became an issue to deliver cars to customers. You know, there are a lot of orders, but the production capacity in the supply chain is disrupted a bit, and I don't know how long that will take. But that's a question for later, maybe. But yes, there are technology changes, but there are also other changes, like in the distribution of cars. You probably noticed that the straightforward dealer approach is being tested, whether it is possible to work with other systems of car distribution, like an agency or value-added reseller, if you will. That will change our business too. So there are a lot of changes coming to us. And on the ownership situation, so private lease, rent, or car sharing, stuff like that, I don't think that is such a big change. Leasing has been in the world already a long time. Yes, private individuals are now also leasing cars. Car sharing and car rental is not that much different, I would say. I think in the end that the professional handing over of cars will remain necessary. Otherwise, you just share it with your friend or with your colleague. You always have a discussion on who made the dent in the car and who not. So on that score, I don't think the changes are all that much. What is an important change in leasing and private leasing is that people want to have flexibility. So I think that that long lease will be reduced to a short lease, and that's something that we would like to continue to do. As you know, we sold our long lease division to ALD, but we are still in the business of doing short lease and rent, and that's a business line that we want to grow.
In the last few years, the trends we just talked about, they have been really dwarfed, of course, by the pandemic, by COVID-19. Could you give us an update on how COVID has affected Stern and how it has affected the car market in general?
Well, it is. There are short-term and long-term issues. The short-term was, of course, difficult that people were not allowed to enter dealerships. People were also reluctant to hand over the car for services. So the business in Q2 last year was really down. To recover a little later, and then really down again towards the end of the year when we had a complete lockdown here in Holland for about a quarter. Now it's getting back to normal slowly, but now we have the problem of the computer chips and supply chain disruptions. And although we can perform our business more or less as usual, is it very difficult to deliver new cars to customers. So the order book is now higher than it has ever been. So we have to focus more and more on used cars, which is, by the way, also in the distribution model that we just talked about, a good thing to do, to focus much more on used cars, import, export, and retail, because I believe that in the end this will drive our margins upwards.
Yeah, clear, very clear. Stern's profile has already experienced a radical shift in the last few years, from being the largest car dealership in the Netherlands with a large leasing division, as you had just explained before, to a much more focused, smaller organization with fewer dealerships, more online, higher service component also. What other changes would you still like to make to your organization? And what about M&A or divestments?
Well, in terms of realigning our business, we've done almost everything we wanted to do. Of course, in the next period, we will refine that because certain strong brands we would like to increase our footprint, and in the weaker brands we probably will reduce our footprint a bit. On the M&A front, we are looking at targets, because we believe that pretty quickly after this whole COVID thing, and people have to and dealerships have to pay back taxes to the government and etc. And finding themselves in a weaker financial base. I think we just saved a lot of money to be ready for acquisitions if interesting targets come to us. On selling things, we have a big stake in Boveme, the insurance company we have been working with already for a long time. We were instrumental in having this company grow to its current size and profitability. But we think that it's not a strategic investment anymore. So as soon as a possibility arises, we want to sell this stake for cash. And in terms of focus, I just said already that to focus very much on used car business, because there we see growth potential and margin going north. We want to expand our rent and short lease division to much bigger size than we have today, and we would like to focus more on service. Generally speaking, we want to be the service winner in Holland, and that can only be done when you have cost leadership as well. So the combination of cost leadership, service to customers, and close to customers is where we would like to focus our business to.
So still a lot to do.
Still a lot to do. We're not ready yet, but we are on our way.
Yeah, and then the car dealership business in itself has always been a relatively low margin business. Could you talk a little bit on how you see margins progressing, given the current profile of the group and more towards servicing, and what would you think is a normal level for both revenue growth and margins?
Well, that's maybe difficult to say. If the traditional dealership business, dealership contracts with the OEMs change towards more the agency model, it will entail that the inventory of cars will not be on our books, will be on the books of the OEM. of course, we will have a margin, an agency margin, if you deliver the cars to customers. You will have a compensation for volume and for quality of service. But in general, I think the return on investment will get much higher as opposed to return on sales. You know, the working capital obligation that we have now, the working capital that we have to put in our business to perform, will be dwarfed by when the agency model will surface. I don't think it will go that quickly. I think it's 2023 or 2024 when that will become normal. But I see already a couple of OEMs going that way quite aggressively. Mercedes-Benz is doing it and talking about it. Also, Stellantis is very, very clear, at least in the Benelux, that they want to distribute the cars through the agency model, and that will bring to us that we can have a much more shorter balance sheet and maybe make the same margins, but the return on investment will then be much higher than today. To increase the margins, I think we need to work much more with used cars, and for that we also need our rent and short lease business, because that's a continuous stream of young used cars for our used car division. So I think by changing the business model, our return on investment will be higher, and not necessarily a much higher return on sales. That's what I think.
That already explains, I think, part of the next question also. What do you think investors are missing if they look at Stern's investment case?
Well,
how do you see valuation as an important shareholder yourself?
Yes, what I think is that people look a little bit at the bottom line at the moment, or at the moment last year and the year before, because we were redirecting our business quite a bit. Now we see our profitability moving up quite nicely. Actually, we are happy to see that first of all our margins are going in the right direction, and secondly that we are very successful in freeing up cash out of our business. So we are using the cash we have, the working capital, much more efficiently than before. And if you look at our balance sheet, we will have a over solvency that's in the order of magnitude of 40 million, which is quite high, and that's basically solvency higher than 30% in our balance sheet if you clean it for IFRS 15 and IFRS 16 elements. So, and we hardly use bank debt, you know. So our cash position, our balance sheet, our liquidity is really good, and that's what the investment community is missing probably, because freeing up cash will mean in the future paying dividends to shareholders.
Yeah, and then you still have the Bovee divestment, which could also be substantial.
That's also a substantial element. So our over solvency will, if we sell this position, will increase again quite a bit.
And maybe Henk, finally, as a CEO, where do you want your company to stand in 5 years' time?
Well, we want to remain focused on the Netherlands as a company. We want to be cost and service leader in the market. That's something we work on already years, and I think we see now the effects of it. And if we are attractive enough for teaming up with an international group, then we are ready, to team up, but from a position of strength and not from a position of weakness. So I think working on this cost leadership and service leadership will be key for the investment return for investors in our company.
Okay. Those were the questions from my side, Henk. Thank you very much for the interview, and hope to see you soon.
Okay, thank you.